Well, howdy there, folks, and welcome into this video here today. I want to talk about four very important points in this video, essentially, in which I see investors kind of getting confused right now. And I think we have to address this. And whether you care about the real estate market or the stock market or money in general, I think this is going to be an important video because there's certain things that are going on that I think are very important that people understand the right perspective, in my opinion, to kind of look at these things. Because I see when either I make comments or other folks make comments that people say, well, what about this? Or, you need to look over here. And I want to give my perspective on some very important points in this video. I hope you guys enjoy this. As always, hope you get some good value out of it, okay? So what we're talking about in regards to today is obviously this, like what's going to happen in real estate over the next 6 to 12 months, which in my opinion, real estate is the most important thing to pay attention to in the overall economy for the next 6 to 12 months and what transpires there. And do we see a major slowdown? Do we see a crash? Or does this market just continue to heat higher and higher and higher? And where's the boiling point for this, okay? So let's get into these 4 core points. The first one, by the way, shout out to FTX, the official crypto partner of me. If you want to check out the link down there and sign up for an account, check out pinned comment, okay? First off, this is definitely something I see out there, is folks when they hear about a potential real estate crash, right? Or even as a major slowdown in the real estate market, they say, you know what? Real estate's really strong right now. Like I go places, I see building everywhere. Maybe I'm in the field of real estate of some kind. You could be an electrician. You could be somebody that, it deals with building homes in general, right? And people say, things are incredibly strong. Like, why would you even think, there's that sort of scenario? You got to understand, like, we all know, like, that's not the debate, okay? The debate is not whether real estate's been strong, because of course real estate's been strong. And of course orders have been, like, everybody knows that, okay? Everybody knows that, there's been a ton of orders for new homes over the last 6 to 12 months, really over the past 2 years, but 6 to 12 months specifically. Those homes are being built right now and will continue to be built for almost the rest of this entire year, essentially, right? Imagine you put an order in for a home 3 months ago. Well, guess what? That home's probably still not even being built yet. It's probably going to start being built in a month or 2 from now. So basically, as far as 2022 goes, you got this massive backlog of these previous homes that were bought that have to be worked through now, okay? Because, I don't know if anybody's bought a new home, but essentially, like, anybody that has bought a new home in the past, you know how long the build time is. At the minimum, it's like a 9-month process. But really, you're in this sort of market with supply chains messed up, it's really been like 12 to 18 months as far as the build time for a home goes, okay? So think about that. Some people that placed orders on homes 16 months ago, 18 months ago, are finally just getting the keys to that home today, okay? So this is very important to keep this in mind, that just because things are great now and there's a ton of construction, those sorts of things, everybody knows that, and that's going to continue to be that way for this entire year. It's more about what are the orders coming in 6 months from now, in 3 months from now, in 9 months from now, in 12 months from now, because that's what's going to be what dictates the real estate market in 2023 and moving in the future, okay? And where pricing goes, obviously, with rates going up and up and up, and the affordability of homes just plummeting right now. Like the homes are not affordable. We all know that. When you keep talking about mortgage rates going up and up, the homes become even less affordable in that sort of scenario, which makes it even more likely that you're going to see a major slowdown. Okay. The second thing I definitely can hear from folks out there is they say things like there's no shortage of buyers. Okay. And that's 100% true. This is another point that I don't even think is worth debating. There's been no shortage of buyers for the past basically about 18 months or so in the real estate market. No shortage of buyers. And, prices have gone beast mode. There's no debate around that. This only goes up to January, by the way. I think actually we're probably somewhere up here now for these prices, okay? So there's been no shortage of buyers. Now, the problem with this sort of argument is like there's no shortage of buyers, right? Is there's no shortage of buyers until there is a shortage of buyers, right? And anytime you're in any sort of asset, whether it be a real estate property, whether it be a crypto, whether it be a stock, whether it be gold, silver, that's going through some sort of boom cycle, some sort of FOMO cycle, which there's no doubt there's no debating, like, real estate's been in kind of a FOMO cycle for the last 18 to 24 months now, right? We've been in kind of this FOMO cycle that's playing out at the moment, but that's what's natural when you're in a FOMO cycle, okay? But here's what's the problem, okay? Let's look at Bitcoin, for instance, right? The most popular cryptocurrency, obviously, in the world, and probably the most one of the most popular assets in the world, right? Bitcoin went from October of 20, from about 11,000 to, next thing you know, around November of 21, Bitcoin's trading at 67,000, 68,000. I think it even approached 69,000 at one point on that given day, right? So during this moment, if you were a Bitcoin bull, you could have said easily, there's no shortage of buyers for Bitcoin. Like, we're going to keep going up because clearly there's no shortage of buyers for Bitcoin. They're just going to keep bidding it up, and we're just going to continue to the moon, right? And obviously, that's not the way this plays out, right? And since then, Bitcoin has fallen about 32%, right? Or maybe even more than 32% since those highs when it was like, 68, 69,000. So think about that for a moment. There was no shortage of buyers until there was a shortage of buyers, and then it runs out. No, in cryptocurrencies and in stocks, these things run through faster. Something like a real estate, it really takes a longer time to play out. I'm talking 6, 12, 18 months to really kind of play this out. You have to let some more time pass. Crypto stocks, those move fast because people can trade in and out of those today, right now, as we're recording this video, right? Real estate's not like that. Real estate's a more calculated process. So the falls, usually for real estate, are, I would say, longer in nature and sometimes take much longer to get out of that. Think about the 2008 housing crisis. Home prices didn't bottom until it was late 2011. Think about that for a moment. It took years of real estate prices going down year after year after year after year until finally things bottomed toward the end of 2011 and then started to go up in 12, 13, 14, and so on and so forth from there, right? If you look at a stock like a PayPal, one of the greatest companies in the world, no doubt about it. An incredible business model, a cash flow machine, a growth machine, just beautiful, right? There was no shortage of buyers for PayPal stock for a long time. And you could have said, there's no shortage of buyers for PayPal stock, so everything, coast is clear here. It's a great company. There's no shortage of buyers. And then there was a shortage of buyers, right? And where the heck did all those buyers go? They were bidding this baby up to 300. They went bye-bye. And this is what happens in an asset when it starts to go down. Buyers start to kind of say, you know what? I don't think I'm going to buy that right now. And it's going down. I could probably get it for a much better price tomorrow, next week, next month, 6 months from now. I don't need to buy it right now. And so the buyers slowly start to say, yeah, because you're not in that FOMO cycle anymore. In real estate right now, we're in a FOMO cycle where there's multiple bids on homes. It's like, real estate investors are competing for properties. You got big companies competing for properties. It's a major FOMO cycle we're in right now, right? That happens in stocks, that happens in cryptos, and it usually ends pretty darn quickly, right? And so the no shortage of buyers is not really a valid argument. The third of these 4 points I want to make, okay? If folks say, well, these investors, they're ready to buy on any drop in the market, right? Anything falls here, they're ready to buy, right? So this has been true, I think, up until very, very recently, where at least a lot of the investors I know of real estate aren't very, incentivized to go out there and buy real estate right now because they've seen the way prices have gone up and they know there's a lot of risk in the market right now. I'm somebody that owns multiple real estate properties. I have no ambition, zero ambition to buy a real estate property in 2022, okay? Maybe in future years, that's definitely a possibility, but this year, I'm good. I've seen the way prices have increased. I think it's unsustainable to have those sorts of increases, and I think there's a lot of risk, and it doesn't mean it can't go up more. It's just kind of like, hey, you know what? I'm good with kind of what I have now. This happens in stocks. This happens in cryptos all the time where they can go on some big epic runs, right? And then, investors start to say, yeah, I think that's about it. Okay. I'm going to kind of pull back a little bit now. Doesn't mean you sell out of everything or something like that. You're just not as happy to go out there and buy, right? And so real estate investors, these folks are seeing this, right? Now, let's say we get into some sort of scenario where pricing starts to collapse. No, I'm not even talking about a major collapse, 5%, 7%. Real estate investors, if they see fundamentals that are likely to continue to deteriorate over the next 3, 6, 9, 12, 18 months, they're not going to run out there and buy because they understand that, oh, shoot, these properties are starting to go down in value. If I go buy this today at 5% down, there's a high probability that's even 5% cheaper in next month from now. And if you start to get into some sort of cycle where sellers could be potentially a little desperate to sell a property, right? You could get into this kind of cycle where people are like, start having to the process of the mind for an investor starts to say, I don't need to buy it today. No different than we just looked at PayPal stock, right? An investor at PayPal stock might have been very happy to pay $300 for that before, $250. But then price starts to drop and drop and drop, and it drops to $275 and then $250, and the investor starts saying, you know what? I don't think I need to buy it right now. I'll wait till it drops a bunch more. And then investors looking at it at 200, like, I don't really need to buy right now. And then 175, then 150, then 100, then 93, right? And eventually you find a floor. But when it comes to real estate, the investors, they've been there. But a lot of them are looking and second guessing kind of that game right now, right? It's very important to understand. Now, the next point I want to make here is a lot of people try to say, what's going on right now in the housing market, right? Okay, last time we had a really, really FOMO type housing market was 04 to 07, right? That's when construction was going crazy. People were obviously buying a lot of homes. The real estate market was hot. Realtors did great. Like, it was a great time for the housing market. And that's the last time we really had what was considered like a boom cycle for real estate, a FOMO cycle for real estate, right? And so a lot of people like to draw this comparison to that 2004 through 2007 bubble time, right? This is also another massive mistake in judgment, in my opinion, right? Because when you go back to that given time period of 04 through 07, it was a very different loan market at that time. See, you got to understand, at that time, you know, I remember my parents sold their house in about, was that 2000, 2001, somewhere around there. And I remember on that for sale sign saying 0% down. You could buy a house back then with 0% down, meaning literally $0. No lie, okay? And so a lot of people got used to putting no money down for homes, 3% down, maybe 5% down. During that time period, a lot of folks didn't even consider putting 20% down. It's like, hey, I only got to put 3% down, 5% down, 0% down. That's awesome, right? Also, the requirements for how deeply a mortgage company looked into, or a bank looked into giving you a mortgage, very low standards at that given moment. Like, literally, you could tell them, and ask anybody that you know did the mortgage process back in those days, and they will all tell you, dude, that was cake. Like, literally just told them numbers, like, I make $150,000. You could lie. Like, it didn't matter. Oh yeah, I make $50,000 a year. Oh, I make $200,000 a year. Like, whatever. Like, I know people that literally could get approved for a mortgage like that and just set a price. Didn't have to show any confirmation that you actually did that or those sorts of things, right? And so you had this cycle that was going on where folks were not just buying one property that they probably really couldn't afford, but they were buying a second property, third property. Also, simultaneously, you had balloon payments that had hit people in a massive, massive way, right? Which essentially, almost overnight, folks all of a sudden had to pay a way steeper price than what they were previously paying. Now, this was a massive, massive negative for the real estate market because people just started not being able to afford it. Simultaneously, you had pricing starting to decrease where folks started saying, oh my gosh, now I'm underwater on this property I just bought. Maybe I'm going to walk away. And that's what you started having. You started having short sales. You started having foreclosures. And simultaneously on top of that, you also had a massive recession starting, which was people losing jobs. When you compound all those things, that's how you get a massive real estate crisis, right? And in the city I live in, Las Vegas, this was a real estate market that prices on a lot of properties went down over 50%. Over 50% from their 2007 peaks through basically where they bottomed at in 2011. Some of those properties went down 50% plus. And you get that by all those different factors all hitting at the same time. And so when I think about today's real estate market, right, I do not think it's the same as, I don't think you can draw conclusions between 04, 07 to this, because the folks that are buying homes nowadays are much more qualified than anybody previously in the 04 through 07 crash, right? I would say there's definitely some spec buying, but the spec buying is definitely at a limited amount compared to that given time period, because previously to that, real estate prices had only gone up. And so it wasn't even in folks' thought process that maybe prices could fall 30%, 40%, 50% plus, right? that is in the back of folks' mind. Even for some folks that are taking more risk in this market, in this real estate market, it's still in the back of their mind that like, dang man, this could come to a conclusion fairly soon. We saw what happened in 04 through 07, and we saw what happened in 08, 09, 2010, 2011 in the real estate market. And so I think a lot of folks kind of look at that and they're like, maybe I won't take quite as much risk as you could. And so these are all factors I think that are very important for investors to think about, to consider whenever you're thinking about this potential of a real estate, let's call it slowdown. Let's say if you think there's going to be a crash, anything like that. Because if you aren't considering these four things, we just talked about in this video, I think you're making a massive mistake. And these are all four very, very important things. And I think, when a lot of people are going to talk about this, on the internet, obviously, in real life, friends and family. And I think it's very important. Sometimes I like to make these sorts of videos because I believe these are the sorts of points that you can bring out to your family members, to your friends, to people on the internet you might be chatting with, so they understand these points and can look at it from a different view of just trying to say, this is just like the last housing crisis we went through, or saying, it's just, we got so much more to climb. And it's important to understand these different risk factors on both sides of it and say, this might not quite be like that for this reason, or there's some similarities here. Okay. So yeah, hope you guys enjoyed this. As always, I appreciate FTX, obviously, FTX US for always being a partner of the channel. Much love as always. Let me know your opinion in the comment section. Have a great day.